Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Mathew and with me is Smriti Chaudhary, and we'll take you through the next half an hour of trade. Now, if you've got questions related to stocks, then you can send them to us on the WhatsApp number that should be flashing on your screen. In fact, it is, or in fact on any one of our social media platforms. Now, let's very quickly take a look at how the markets are faring, and it's not a very good picture right now because the benchmark Nifty 50 is trading with cuts of about 0.75%, and it is very close to the low point of the day, but holding above the 22,100 mark for now. The broader market's also seeing cuts, and in fact the mid-cap index is down about 0.8% as we speak, also at the low point of the day, and the small-cap index has seen exacerbated selling. It is down about 1.2% as of now. In terms of the sectoral indices, practically all of the sectors are in fact in the red. There's one that stands out, and that is the auto pack, and that's because a couple of stocks are doing incredibly well. The likes of Hero MotoCorp as well as TVS Motor on the back of results is doing quite well. But everything from oil and gas to energy to FMCG to metal to banking, all of them are lower. In fact, the PSU banking index is perhaps one of the better performers, down only about 0.33% right now. But we are focusing in on Larsen Toubro because this is one of the worst performers, if not the worst performer on the benchmark index. It is down about 5% in trade today on the back of its earnings, but more importantly on the back of the outlook for the first half of the financial year. The question is, how is this different from what was expected earlier? Because it was always expected to be a weak first half. Anushi is joining in to tell you just that. Anushi, how is it? What is it that the management said that was different from what was expected, and why is the stock getting hammered?
Hey Alex, so if you look at the commentary that the management has given, a couple of factors that have played in for the company which has resulted in this 5% decline in stock price we are seeing. A is the order guidance which came in for FY25. As you correctly mentioned, that the street was already anticipating for a H1 FY25 to be weak with the union elections in play over here. Again, if you look at the Q4 also, the effects had already started playing in, about 5% of a dip in the order inflows. But what was not anticipated was the management trimming the order inflow guidance from 20% last year to 10% this time. So this was a major factor which has resulted in the street seeing the kind of decline we are looking at. What this is on the domestic side that we are factoring this play coming as. What on the international side also, if you look at the overall growth across FY24, 89% of a growth in the international orders, and a major contributor to this was the Middle East region in the hydrocarbon space, with Saudi Aramco ramping up its order intakes over here. But now going forward, it is anticipated that the Middle East are tightening their spend going forward. So it is going to be difficult for L&T to be able to maintain the kind of trajectory that they had last year, again raising concerns on both the domestic and the international side as well. Next is on the margins also, if you have to look at. So what happened was last year also a lot of legacy orders were in play which were in low margin in nature. So again, going forward in FY25, what was anticipated was that the higher margin orders would be executed, which would lead to some kind of an improvement over here. But the management again guided for a flat YOY margins, which again now the street was pegging for in a different direction. So that has also led. But what should not be missed out is the kind of growth that the company has displayed. 15% of a growth over the year, and they're maintaining this going forward as well. Even if you look at the overall healthy order book, that saw about a healthy order growth of 31%. So a high base also plays in when we are looking at FY25. In fact, Citi also believes that this 10% guidance that was given was on a strong base and is a confident booster going forward. So these are all the factors that we should be looking out for L&T.
All right. Thank you so much, Anushi, for that. And on that note, let me introduce you to the guests for today. We have Ashish Maheshwari of Arihant Capital Market and Osho Krishan of Angel One joining in on the show today. Thank you so much for joining us on the show. And Ashish, I'm going to come to you first on L&T. We saw the results pretty good in terms of numbers, but outlook remains weak, especially the one that Anushi mentioned about the trim in order book that they're expecting going forward from 20% to to 10%, and that seems to have upset the markets as well. Brokerages also seem to have changed their rating to a sell now on L&T. How are you viewing this, and if there are any price targets that you have on the counter?
Yes, I agree with you. Though numbers were good, 4,400 crore profit was one of the record profit they have declared. But the future outlook is quite bleak, if you ask me. Because one thing we should not forget that 45% of their revenue come from international market. And international market also, if we see 70% come from West Asia and Middle East. And the way geopolitical issues are happening in these countries across the board, I don't think so any major order will flow to the company. And maybe they are talking about one quarter, I'm expecting at least in first half of the year. So, like we have seen only 25,000 crore worth of international order teams in this quarter, which are one of the lowest maybe. So, this is one major reason why market is worried for this. Now, second issue is as this is election year for election time in India also. So not many bigger orders will flow as far as government sectors is concerned, which is primarily doing a lot of capex compared to private sector. So these are the factors which may give another tailwind for this company. There's no such tailwinds available. Only headwinds are there, international and domestic side both. So I'm expecting another bleak quarter numbers will come in as far as Q1 of FY25 is concerned, and that's what market is getting cognizance to also. So in my view, also the stock can touch 3,000 rupees mark because we have seen sharp run up in this stock from 2,200 to 3,700 plus, and with this kind of grim outlook, stock is all set to even further dip.
Very quickly, just to follow up to that, if it does reach that 3,000 mark, would you buy and would you wait till that happens, or would you keep nibbling?
I like to buy at 3,000 rupees mark because nothing wrong with the company as such. They will keep on growing because almost 4,75,000 crore worth of executable order book they are sitting on. So there's no dearth of executable orders. Only order inflows are slowing down, which is a phenomenon for another 6 months.
It's time to start the query segment, and in fact a lot of you have already written in, and I'm going to take the first question from Neeraj. He's writing in from Hyderabad, and he's asking about MTAR Tech, which is down in trade today, down about 0.8% or thereabouts, trading at just above 1,800. He's looking at a long-term outlook for this. So Ashish, I'll come back to you on the fundamentals. Would you suggest a buy at this point?
See, of late, this stock is not giving the kind of returns which it has given. From 1650, 1660, stock went up to 2,900 mark, and we have seen continuous sale off coming in this particular stock because some amount of selling is coming in even in other defense related to stock and private sector. In fact, none of those stocks are really performing in this particular sector. So my suggestion will be to wait for fresh entry in this stock. My entry level will be around 1,700, which will be almost 50 to week low at this stock. Nothing wrong with the company. Only thing is as profit taking is happening. So let's not try to catch the falling eggs.
Right, got it. The next counter we're talking about is Grauer and Weil. It's a 4,000 crore market cap company. This one's from Ramesh from Chennai. They say they bought the counter at a price of 87 rupees. It's currently trading at around 91 rupees. Osho, if you can tell us some technical levels on this specific counter. They have a little bit of profit here. The counter seems to have given 60% returns in the last 6 months, but in a bit of a downtrend right now. What are the key levels you should watch out for?
Can you please name the stock once again?
It's Grauer and Weil.
Yeah, it's spelled as Grauer, Grauer, and Weil, Weil. The stock is currently trading at 91.1.
So I guess this one is listed on BSE. That's why
Yes.
I don't have the chart for this counter. So I don't have a track for this counter, but so I won't be able to give a proper view on. this space.
Okay, there's another counter that we have from the same the same viewer who's written to us from Ramesh. They're talking about CG Power. They say they have an averaging of 300 rupees. We saw the company come out with its results yesterday, and the counter is slightly lower today in trade. Osho, if you can pull up the chart for CG Power and tell us if this is a hold for you.
See, overall, CG Power has given a very strong breakout in the last two trading sessions, approximately around the zone of 550, 560 odd levels. And I'm expecting the momentum to continue on the higher end. On a very optimistic note, I'm expecting a target of nearly 620, but not on a vertical basis. There can be some kind of blips or profit booking that can be seen. But on the lower end, again, 550 to 545 should be acting as a support. And on the higher end, 620 to 640 is the target zone. So one should try to accumulate this counter on any dip towards 550, 545 for short-term perspective. But for even medium and longer-term duration, the counter is very positive and is having a very strong technical setup.
Got it. All right, the next question is coming from Mohit, and he's writing in from Ludhiana. He's asking about campus activewear, which is bought at levels of 284. Ashish, this is a question for you. The stock is up and about in trade today, as much as 5%, and it's still trading, however, below his buy price. If I remember correctly, there was a little bit of a question mark about the operational performance of this company. What do you make of the company, and should he hold on?
I think after a few lackluster quarters, December quarter was good for campus activewear, where they did a profit of around 24 crore. But still, I'm not that bullish as far as campus activewear is concerned. I think whatever the euphoria related to this counter was, this is almost over now. And instead of this, metro shoes will be a better bet if you want to remain in the same segment, because the kind of profitability growth metro shoes is delivering is much higher than what campus is expected to deliver going forward also. And there's a tough competition with new players coming in and sportswear. So metro at 1,000 rupees will be a better bet.
All right. The next counter we're talking about is Sula, and this one's from Ramesh from Hyderabad. They bought the shares at a price of 510 rupees. It's in a bit of a pressure today, down about 6.5%, trading close to 506 rupees. Ashish, on Sula, we saw the results, not great. Revenue, single-digit growth, margins contracted. But premiumization is a play that all the alcoholic beverage companies are depending on. So from a longer term perspective, would you suggest holding on to the counter?
The kind of revenue growth, just 3.6% kind of revenue growth and this kind of valuation are still not justified. I was listening the commentary on your channel also of management, though they are not that bearish. But in my view, what kind of growth market was expecting from them is not forthcoming as such. And not only them, we have seen other wine players also. They are, be it USL or UBL, etc., also not doing that great as far as numbers are concerned. So my suggestion will be to exit from this stock or look at fresh entry, maybe at 425 to 450. But I'm expecting some more correction.
Interesting. All right. And it also depends on your preference if you are above legal age, of course. In the summer, I don't know about wine versus beer. Let's talk about the interview, though. My colleague Harsh spoke with Rajiv Samant, who's the Chief Executive Officer of Sula Vineyard. Ashish was pointing out that he watched it. I'd encourage you to watch it as well. Now, let's talk about Suresh's question. He's writing in from Chalakudi in Kerala, and he's asking about PPL Pharma, which he's bought at levels of 142. The question is for you, Osho. We're talking about PPL Pharma, 150 shares bought at levels of 142. Would you hold or sell?
This counter is very positive. We have seen a V-shaped recovery in PPL Pharma in the last week. So I'm expecting that from here onwards, there is ample amount of opportunity on the higher end for PPL Pharma. The immediate target that one can expect is around 165. And on the downside, there is a very strong breakout, or even called as a neckline support, around the zone of 142, 145. So this is a zone where one can expect a strong demand or a buying traction in this counter. On the higher end, 165, 168 is the immediate level where one can look to book their profits from short-term perspective.
All right, we'll slip into a short break now, but we'll take more queries on the other side. Stay tuned. Welcome back. You're watching Ask Profit on NDTV Profit. Let's dive into the queries again. This one's on Voltas. The question is from Rosemary. They say they bought the counter at a price of 1,492 rupees. It's below that. It's trading close to 1,289 rupees. We saw the results come in yesterday. But let's take a technical check on this. Osho, what are the levels that you should watch out for, and what should somebody do considering they bought at slightly elevated levels? Osho.
I think you might just
Yes. See, there has been a very strong vertical rally that has been seen in Voltas from the zone of 1100 towards 1500. So now on technical basis, there can be some profit booking or time-wise correction that should happen, and that should be considered healthy. But yes, taking the position that they have taken the position at the lifetime high for Voltas around 1500. So there can be some time that they have to spare for the counter to rebound towards the same zone. But I am expecting for short-term perspective, 1250 should be acting as a very strong support zone for this counter. And on the higher end, I am expecting a target of nearly 1400 for short-term perspective. But again, reaching the price of 1500 will require a lot of time.
Got it. I'm coming back to you, Osho, on this next one. We've got a question from Swastik on BEL. He's got 2,000 shares purchased at a price of 160. The stock is currently trading at 230, so he's making a pretty penny here. He's asking whether he should hold on or buy more at this point.
See, certainly if there has been a very decent upsurge from the price where he has bought the position, so I will be suggesting to better book some of the profits from here onwards. Try to maintain a 50% kind of a profit booking and try to gauge the momentum on the lower end. If there is any dip towards the zone of 210 to 215 in the near period, then one should try to accumulate the counter once again. Overall, the setup is very, very bullish, and it is having a cycle of higher highs, higher lows, for which the support lies around the zone of 210. So once the price comes down to 210, one should definitely try to buy this counter once more time.
All right, the next counter is NIIT. This is a short-term query again. This is from Saina from New Delhi. They say they bought the counter at a price of 106 rupees. It has fallen quite a bit in the last couple of sessions. It's down about 7% in the last 5 sessions, trading close to 98 rupees. Osho, what are the key levels you should watch out for in this counter?
See, overall, this counter is into a corrective phase. I'm not expecting a very strong resurge or rebounds from in this space for the time being. But on the higher end, again, a very stiff resistance is placed around the zone of 110, which is coinciding with the 200-day SMA. So until it breaches the zone of 110, it is likely to have some kind of pressure within. So better to wait for those levels to surpass, and then only it might attract some kind of buying traction.
Got it. Okay, unfortunately, we've got a question on several stocks. I will have to reduce it myself. I would encourage our viewers to stick to one stock per query. Satya is asking about Borosil Renewable out of a list of stocks, and he's looking at whether or not to add this for the next 1 to 2 years, and whether or not 20 to 25% upside is possible. Ashish, based on the fundamentals, is that a possibility?
See, instead of Borosil Renewable, I'll like to go with SW Solar. In my view, companies which are manufacturing solar panel are facing tough competition in domestic market. Instead of this, those companies which are doing EPC projects is trying to gain more. And Sterling Wilson, now Reliance Group company, they have a lot of in-house projects which are captive, and the government focuses more on solar energy as such. So this will have benefit more SW Solar instead of Borosil Renewal. And we have seen good correction also happened in Borosil Renewals from high compared to SW Solar, which is doing much better.
Why don't I just tell you what he has identified? You've already spoken about Sula and you've said that it's not a buy. The others, apart from Borosil Renewable, he's identified as Motherson Sumi Wiring and Orient Electric. Out of these, do you anticipate that there's either one of these can achieve 20 to 25% upside in the next 1 to 2 years?
Yeah, I think Motherson Sumi can be a better bet for 20% upside if you're looking at for a couple of years. Orient Electric is my pick number 2 in this segment. This company will also do well because the kind of demand which is building up in this particular sector. So whether it's a fan or cables, etc., Orient Electric will also do well.
The next counter we're talking about is Geo Finance. This is from Bharat. Now, Osho, we're in an election period, and of course, there's volatility, and that seems to be scaring this viewer. They say now, obviously, the counter is trading close to 350, but has fallen about 9% in the last week itself. Going forward, a month to go for the counting day. How do you see this counter behaving? If you can give us some key levels as well to watch out for in this.
See, overall, there can be some kind of jitters that can be seen in Geo Finance for the timing, but looking at the overall setup, it has surged a lot in the last 3 to 4 trading months. So there can be some kind of profit booking that can happen, but looking at the recent development, as it had plunged below the swing low of nearly 355, 358 odd levels. So I'm expecting the time it breaches the 50-day exponential moving average, which is around the same levels, 348, then this counter can even go down towards the zone of 325 to 320. So there can be a decent profit booking that can be seen for the short-term perspective, but overall the longer duration remains very positive and buoyant for this counter. So any dip towards 320 will again augur buy for the buyers for medium to short-term perspective.
This is a question specifically for Ashish, and this is from Ravi Kumar. He's asking about Balaji Mines, which he's bought 100 shares off at levels of 2,300. He's asking whether to hold for the long term, and okay, his definition of long term is 1 year.
Yeah, I think if you're having 1 year time horizon, you can continue to hold this stock. This is much steady stock in especially the chemical space compared to other peers where they are not going anywhere. So surely you can look at this stock for 1 year time frame. My target will be 2,700.
All right. Unfortunately, we're completely out of time on this edition of Ask Profit. Thank you so much, Ashish and Osho, for joining in on the show and for answering these questions for our viewers. And viewers, hope you were able to take your questions today. But if not, we'll definitely try and take them tomorrow. But don't go anywhere. We have lots more lined up for you on NDTV Profit.
Hello and welcome. We have with us the management of Arvind Limited to talk to us about the numbers. You're watching NDTV Profit. I'm Harsh Saita. We have with us Mr. Puneet Lalbhai, who's the Vice Chairman at Arvind Limited, to talk to us about the Q4 numbers as well as what one can expect from Q1 as well as FY25 full year. Welcome to NDTV Profit, sir.
Pleasure to be here.
Hi. So, sir, first off, let me try and break down this quarter. What's exactly transpiring with regard to margins, and where can one see numbers start to stack up for FY25? What's the expectation like?
So I think it was a very strong quarter. We had revenue growth up to above 10%, which is the first quarter in many quarters where we've seen such growth. The growth was fueled by both our volume growth in garments and our very good performance in the advanced materials division. I feel that the year was a story of two halves. The first half of the year was very low demand, brands being saddled by inventories. We worked through all of that, and towards the second half of the year, demand started reviving. I believe that going into the next year, that better demand scenario is likely to continue. AMD continues to remain strong, so we should see some growth over last year overall next year, with it being driven by the same two factors: growth in volumes, especially on the garments front, on the conventional textiles business, and growth in AMD continuing to be strong.
Right, sir. And with regard to raw material, how's the raw material cost evolution playing out? If you can talk to us about that and set us the context for FY25. How has, of course, April already been? But how do you anticipate the numbers shape up in terms of FY25? Will raw material prices remain benign? Is that the expectation?
So what we saw last year was dramatic raw material deflation. And that led to, the top line on the entire financial year being slightly negative. I think most of the raw material deflation is behind us now. And prices are going to remain range bound and hopefully reasonably stable. That is our view at the moment. So we don't see any raw material linked impact on top line going into the new year.
Understood. And therefore, margins should continue to get